Welcome back, ladies and gentlemen. This is the Bearable Bull here. And I got this aggressively average content for you today, as yet again, the XRP community has been right on the money. Ladies and gentlemen, I told you all a long time ago that the CFTC was going to step in as the main regulator of crypto here in America. And boom, like clockwork, we have arrived to that moment. Brad Garlinghouse is at Davos at the World Economic Forum, where your favorite reptilians tell you exactly what the world agenda is about to be. And he's talking with the CFTC head Caroline Pham on progressive and functional policy and the digital asset space. Guys, don't tell me we can't see the future. Don't tell me we're not correct. We got unjustly targeted by a lawsuit of corruption, but we've paved the way for everyone else in the crypto space. In today's video, I felt it best to play you the entirety of this Bloomberg clip, this Bloomberg discussion with Brad Garlinghouse and Caroline Pham, as this is how you stay informed with what the elites are saying. I have some important videos coming up in the following days, including an important interview I just had with Proppy, telling you about the future of crypto and real estate. But for right now, what's going on at Davos and what we've been listening to being said is nothing but perma-bullish for the crypto space. 2024 is the year that we begin to see profits for not just crypto, not just XRP, but technology as a whole. And man, I'm so excited to be helping lead you all on this journey all throughout 2024. Ladies and gentlemen, this is the Bearable Bull here. Thanks for tuning in. As always, I appreciate every single one of you. Now I leave you with Brad Garlinghouse.
Maybe accelerated, but we are in this moment. And so, Commissioner Pham, I'm interested to know, what other governance do you think needs to be addressed now in this, adolescence, if you will, that we're going through?
Mm-hmm. So I think the point about how do we address market fragmentation potentially as different jurisdictions are taking different approaches to regulating blockchain technology and crypto. And I think it's the same as any asset class, as global markets in any asset class. So you do need to think about ways to mitigate market fragmentation through promoting regulatory cohesion. I think multilateral engagement through bodies like the Financial Stability Board, IOSCO, and the BIS are very productive. And in fact, I've actually proposed a CFTC pilot program that could be a path forward to having something like a BIS-style innovation hub project in the US. And I think that could help to move the needle forward to safely experiment and gather data to study what the effects of this technology are.
Well, that's a good transition for you, Brad, because for many, the speculative cases are the prominent cases. What do you think are some examples of non-speculative use cases, and how do we distinguish when drafting policy on those?
Well, a lot of times on the policy piece, we talk about drafting new rules, and it's like, well, it's not often we develop rules for technology. We typically develop rules and laws around the outputs, right? So things like KYC, know your customer, that doesn't change just because you're using crypto. Money laundering, anti-money laundering laws, that doesn't change because you're using crypto. So I don't think we need to think about those as somehow separate and distinct. We need to make sure those are being applied, and frankly, as we saw with the Binance settlement, they are. Maybe it was slow, and frustratingly, as Commissioner Pham pointed out, the courts in the United States have moved faster than the regulator. That is not in my judgment.
That is not normal.
That is not normal. I'm glad the courts are actually getting there, but it'd be better, I think, if we had, and I'm primarily speaking of the SEC, to actually take the time. I remember they opened up a whole bunch of new job descriptions on their website, lawyers to prosecute litigation, enforcement through litigation. like, why not hire people to actually codify how this should work, as the UK has, as the European Union has, as the UAE has with VARA. I'll also give Commissioner Pham props. You know, she spent time going around the world and meeting with a lot of these other regulators, where this is not rocket science. You know, you could probably type into Sam's OpenAI, how do you regulate the U.S. and get a better answer than we're getting from the SEC. Maybe. I haven't tried that, actually. I should try that. Anyway, look, the amazing thing is I really do feel like the U.S. should and could be a leader in this market. And there are a lot of companies that are leading, but the U.S. government has not yet been providing that framework that should help.
Yeah, and I think to pick up on points that both of you raised, I think we need to get over the fact that if you are engaging in activity that involves money, banking, or markets, of course you're going to be subject to financial regulation. But what I think is more interesting is how do we address non-financial activities? How do we distinguish between what is financial activity and commercial activity? So I'll give you an example. Amazon and eBay are digital marketplaces, but nobody thinks that they should be regulated like securities exchanges. So I think we need to focus on that set of laws. And I actually think a big way to move the needle forward in the United States is if we developed a definition for utility token like other jurisdictions, as Brad has noted, have. That's, I think, a step forward to understanding how this is going to impact the real economy.
Let's talk about the two kinds of investors in this situation. You have retail investors and you have more sophisticated investors. What are the implications of focusing more of this conversation on the sophisticated investors versus the retail investors?
So I think what's great about the CFTC's framework, regulatory framework, is that it's principles-based. And if you look at bodies like FSB and like IOSCO, they also take a principles-based approach because, of course, every jurisdiction needs to take their national laws into consideration. Well, the benefits of having a principle-based regulatory framework is that it works for both sophisticated investors and it protects retail investors. And I think the benefits of a principles-based framework is also that it allows regulators to anticipate and adapt to new and emerging risks because, as we've all seen, the rulemaking process can be bogged down, it can be halted, the courts can overturn it. It takes a long time, and it should take a long time. There should be opportunity for public consultation and notice and comment. But at the same time, there's a lot of other tools that regulators already have today. There's the power to inspect or examine, the power to enforce, as we've discussed, and the power to regulate. And I think those are broad authorities. We should be using all three.
So, you know, getting into crypto and blockchain and leveraging the technology, Ripple set out to modernize payments by building blockchain-based financial infrastructure that vastly improves on much of what the world uses today. So, Brad, are payments still the best use case for crypto assets and technology that undergirds it? And what payments can lead to in terms of other use cases?
Well, for me, I mean, Ripple started with payments. Actually, when I joined the company 9 years ago, there were 3 different groups within the company working on an identity solution, a payment solution, and I'm forgetting the third one right now because that was a long time ago. But it was like, hey, let's focus on one where there's a clear, it's solving a real problem. And look, while we've had a dent, maybe we've made a scratch in that market, it is a massive market. And I'm sure many people, by virtue of sitting in this room in Switzerland today, have had the experience of sending money overseas. It is still high friction, high error rate, it's slow, it's expensive. And that's the opportunity to use these technologies to actually make it much simpler, much faster, without sacrificing some of the core principles around KYC or AML or what have you. So I think the payments opportunity remains very large. It will continue to make progress. And when I say that, I mean both Ripple and the industry at large. There's other people approaching in different, some are going after consumer-based solutions. Ripple's very much focused on the enterprise and the infrastructure around that. There are, I think, going to be other use cases that are profound. I think the fact that there's now an ETF approved in the United States with major institutions like BlackRock leaning in is further validation, but I think we need to make sure that we're focused on utility. Some of the things I'm sure that people in this room have heard talked about, tokenization of real-world assets and democratizing access to the participation in those markets, I think is very real. Whether that's commercial real estate, and some are working on identity-based solutions and even voting-based solutions. I'm certainly not an expert on those things, but I think the blockchain-based solutions are here to stay, and I think in the coming years you'll see more and more real-world use cases gaining traction.
Well, you're getting into the space of innovation, which I want to shift and ask you. Regulation often can stymie innovation. And I'm curious from your point of view, how do you think this opportunity for policy to enable and optimize the technology as opposed to be restrictive and smother new use cases, because we're entering a whole new dynamic of considering how to deal with these kind of assets?
This is such an important question. So as Brad mentioned, I did a global stock-taking exercise to go and engage with other jurisdictions and understand how do they facilitate innovation. And so what I've observed is that there are three key ingredients that you need in order to foster innovation. So 1, the rule of law. 2, political stability. 3, regulatory clarity. And so I think it's incumbent upon regulators to do our part. And right now with the WEF Global Risks Report says that there are, I think, over half of survey respondents that see a moderate risk of global catastrophe in the next 10 years. That's a big deal. That's why we're all here, right, in Davos. And so when you look at the 4 main structural forces that are driving this change, climate, population, technology, and geopolitical, if all of this is changing our lives, then we regulators need to be looking to the future. We need to be trying to future-proof. I've spent my career, actually, my career's been defined by studying and addressing crises, whether it's the 90s savings and loan crisis, the 2008 financial crisis, or the COVID-19 pandemic. All of that has taught me that regulators, and sometimes the United States, have a tendency to be reactive. We need to flip that around and be proactive. And so in being proactive, what are the things that we can do? We can engage. We can engage with subject matter experts, and we can also engage by building capacity at regulators as well, so we can actually understand how this is deployed and used.
So to both of you, with regard to AI, in what ways do you think AI might impact this industry's trajectory? Jump ball.
I'll start on that one. I mean, look, I think anytime you have a very nascent technology, and this was true in previous years with crypto here at Davos. Davos, someone said to me earlier today, like crypto's become boring at Davos because it's all about AI. And I think that's actually a natural progression of a very promising, very exciting new technology. And I think, AI is starting that journey, and there will be regulatory hiccups and hurdles. You're seeing some of those. I think there will be a need to clarify, what are the real utility and what are the business models around that, how they're going to be applied. But obviously, I think AI is an extremely promising technology. I just think it's going to go through its journey, and the kind of technology hype cycle. We're early in that, and that's part of the excitement and the opportunity.
Yeah, and I'll address it from a markets perspective. So markets are driven by efficient markets are driven by information. AI enables the ingestion, the processing, and the analysis of tremendous amounts of data and information. And so I think it's going to be interesting to see how market structure might evolve over the next coming years as more and more AI is deployed, just the same way that algorithmic trading changed how market structure worked. And then I think, of course, since I have a legal and compliance background and I am a regulator, I've been very interested in the applications of AI to reg tech. So I think that there are immediate gains that people are working on and that regulators can use and adopt around using AI to improve market surveillance.
So you mentioned that a lot of countries outside of the United States had really been more progressive in this, and you shared that in your research you spent time and you went to all of these different countries. When you reflect on your research and evolution of the work that you've done and what you've gone through in Ripple and defending and trying to clarify where you are, I'm curious from each of you, what do you think are the biggest lessons we've learned in the last year from your respective positions? Commissioner Fan, let's start with you.
Well, I think, and it's no surprise, as we've talked about, the U.S. is the world's largest market, but the rest of the market is even larger. But It is true that smaller and more nimble countries like Singapore and the UAE have been able to, I think, address the adoption of technology in whatever sector, probably in a more pragmatic way. In the US, things tend to get framed as sort of good versus evil. We have that, but technology, at least I think, is not evil. It's how you use it. But I think, similar to what Brad was saying earlier, right? There have been strong headwinds, but I've heard that there are green shoots coming. But nonetheless, particularly if you're in financial services, I think what we've seen is that risk management must be at the core of your business.
I'll just echo. I think that, to the extent that there have been self-inflicted wounds around crypto, it is somewhat around the risk management. But I think, look, the opportunity ahead, both around crypto and getting clear rules of the road, it will get there. It's just frustrating that it has been slow and painful. And I think, look, I think with an election coming in the United States, there will be some changes that happen. I think the current chair of the SEC, I think, has been exercising a political agenda, not a good policy agenda. And I think that will shift, just a question of when and how. So we'll see what happens.
Well, that concludes the conversation, and I know there's another one coming that everyone's really excited about. But this was great talking to both of you, and I'm sure the group enjoyed it. So thank you both so very much. And I'll bring up Brad Stone to take us to the next conversation.